Good evening and welcome to my midweek recap and trade plan for the S&P 500. I've taken a couple of trades here. Monday I got into these 12 October 290s at 75. Um, Foolishly did not have a stop in place, so those are worthless. I actually forgot that I had them based on following too much of the other stuff in the market and just lost track of them. So that's a fault on me, and that's going to be a complete loss. Tuesday, I got into these 19 October 287s here, wanted to stay just at the money. They did go up quite a bit, didn't lock any in, and actually closed me out here on the gap below price action here on Wednesday. So took the L there, still holding those June 325s and the December 313s. Probably not going to be worth much after this kind of a drop. So just going to write those off as well, which brings up an important point. These types of plays, they're not too high conviction, are usually smaller size. So I am operating under the understanding they could turn to zero and it's not going to crush my account. So even though I do take some of these large percentage losses, they're not huge positions. Anyways, end of the day today, I did get into these 280 calls here at 5:30 for November 9th. Based on the volume, looked like we were having a broadening pattern set up. If I can get my line to draw here, there we go. Just like in Apple, looked like we were having something like this. It was going to bounce and reclaim. So extreme volume on lows, went ahead, took a stab at it close enough to the 200 SMA for my liking. Not a full size position. I am willing to build into this position and look for a move higher to hopefully stabilize and base, put in a base down here. So real quick, I can pull up the extended hours to show what's going on. Price action has dropped below the 200 SMA and extremely low volume here after hours, but in the last hour and a half of the day, including after hours, there is approximately 58 million shares right in this region here that traded. So that is huge for the S&P 500. So we'll look forward to seeing what that does tomorrow. Now, didn't take these 277s. As I said, a lot of volume came in here at the end of the day. Plus the IV, the implied volatility in a lot of options was really high. So 277s were just a little bit more than what I wanted to pay for something like that. So I'm just going to hold on to what I'm in now. Below the 200 SMA, there's not too much to do. Maybe 270 is a round number. But as you can see on the big chart over here, once price action does actually break the 200 SMA, it could drop below it considerably, where in the past it has only put in a base. It's come down and tested a prior support, sometimes multiple times, and put in new all-time highs closely thereafter. So just at a glance, support, base, breakdown into a base, support, 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 false breakdown, and another one over here, breakdown into a base, double bottom, rally to new highs, support, 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 all in here. We're now at new all-time highs. So it doesn't make any sense to me to trade this as a breakdown of the 200 SMA, because even if it does break down, it's going to reclaim it, and if it does break down, I'll just simply sit and wait for a base to set up before it's more clear to me what's going on and that we're actually going to continue higher. So just trying to be patient, even though I am in a couple of new positions, and hoping for earnings to be a nice catalyst here for the overall market. On to the futures real quick, because they are still moving after hours, getting a little bit of a bounce here just below the 200 SMA. It's going to be interesting to see what happens here. If it's able to break back above there, will tell me that I'll at least have a chance of making a profit here into the day tomorrow. So zooming out here, these arrows are still here from the last time where a significant amount of volume came in here at support levels at the 200 SMA or 50 SMA and held as support, put in a base, and continued on. So today we put in almost 3.5 million contracts traded for the E-mini futures, which is a extremely high amount. If you zoom out here, there's only a handful of times where where volume was actually that high or higher. So go back and check them out. A lot of them, the vast majority of them, where support plays, V bottoms, bases, um, bullish reversals, the vast majority of them. So even if today is not the bottom, we're very close in my opinion, and we're probably going to start rallying soon. As I've said numerous times, the S&P 500 is designed to go up. So even with a huge sell-off like today, just like back in February, what happened? Rallied back up, came down, tested the level, which confirmed as support, and put in new all-time highs. So this is normal market activity. Still going to stay bullish. Still going to look for calls at my spots. I'll just take a moment to congratulate you bears. You've been calling for a top for months, calling for crashes for weeks, and you finally got one. So congratulations on your move that happens once every 6 to 9 months. Relish in it, enjoy it, and come back and play again. If you have any questions or comments, please feel free to leave them down below. Have a good evening and good luck.